If you had an extra $10,000 right now, would you drop it all into your Wealthsimple account today, or split it up over the next year? It's the oldest debate in personal finance, the all-in, one-time lump sum investment versus the slow, steady approach of auto deposits, or what the finance world calls dollar cost averaging. And with all the seamless automation features on platforms like Wealthsimple, this choice is more relevant than ever. This is not just about math, it's about psychology, risk, and which strategy is the right one for you. Let's break down the two sides. First up, the lump sum investment. This is where you take a large chunk of money, say, an inheritance, a big bonus, or a year's worth of savings, and invest it all at once. The primary argument for the lump sum is simple: time in the market beats timing the market. Historical data shows that because the stock market generally trends upward over long periods, getting all your money working for you immediately typically leads to higher overall returns about 2/3 of the time. The whole amount starts earning compound interest right now. If you're a long-term investor with high conviction, the math is usually on your side. But there's a massive catch: regret risk. Imagine dumping that $10,000 in on Monday, and then watching the market immediately crash on Tuesday. You're fully exposed, and the emotional stress can be enough to make you panic sell, which is the single worst thing an investor can do. That's where the power of auto deposits, or dollar cost averaging, comes in. This is the strategy you use when you set up a recurring deposit on Wealthsimple to automatically invest $50, $100, or $500 every single week or month. This method has a huge psychological advantage: it smooths out volatility. By investing fixed amounts regularly, you buy more shares when prices are low and fewer shares when prices are high. You're less likely to suffer the gut punch of buying at a market peak. It takes the emotion and the guesswork completely out of the equation. For most people, auto deposits are simply the practical reality. You're investing from your regular paycheck, not a sudden windfall. This builds a consistent, disciplined habit, which is the real key to long-term wealth. So, which one is right for you? If you have a large sum of money right now, and you have the stomach to watch it potentially drop in the short term, the data suggests lump sum for the highest potential return. But, if you're a beginner, if you're risk-averse, or if you simply generate your investment cash monthly through your income, then setting up an automatic, recurring auto deposit is the clear winner. It's the stress-free way to build a robust portfolio and ensure you never miss a month of compounding growth. The best strategy is always the one you can stick with, and Wealthsimple's automation tools make sticking to regular deposits easier than ever. Get off the sidelines, choose your rhythm, and automate your way to a stronger financial future. With that said, thanks for watching, and until next time.